Good afternoon, everyone. Today I'm chatting with Tavi Costa from Crescat Capital. In today's interview, we get into the gold market and how Donald Trump's tariffs are playing a role in the volatility that we're seeing. And we also get into silver, where it could be heading, and why we haven't seen the big moves just yet. All right, everybody, enjoy the interview. Tavi, thanks for joining us.
Thanks for having me. Looking forward to this.
So, Tavi, where do we
Mm.
start? It's been quite a couple of weeks, even we could say a couple of months for the gold market. So it's great timing to have you on here. Earlier this week, gold hit $3,500, and then Trump came out and said, "Oh, he's going to step back on these tariffs against China. He's no longer going to fire Jerome Powell." And then, literally, I think about just after 24 hours later, the rhetoric kind of changed again. Gold started coming back after going drawing back a little bit, and now it looks like the gold market is just sort of at a standstill, trying to figure out what happens next. So I'm curious what's going through your head as you are watching the gold market right now.
Well, I think a lot of people are interpreting the gold market movements either from a technical standpoint or by the news on the tariffs, and certainly has been some impact on that front. But ultimately, what's been driving the accumulation of the metal is what's been happening as well with the monetary constraints we're seeing across most governments having to accumulate gold because of the magnitude of the debt that we're seeing. And yeah, that debt problem has been around for a very long time, and more recently because of the deglobalization trends, i.e., also the tariff situation, are escalating further the need for these central banks to own more and more gold. And we're so far away from where those reserves should be relative to their other assets. And I think this is just the beginning of a much bigger movement. And I believe in what Scott Bessent said right before he was nominated as the Treasury Secretary, when he claimed that this is the beginning potentially of a monetary realignment. And I firmly believe that that's going to be the case. And if so, you can throw out of the window your overbought and indicators on your technical charts, because that's just going to be largely irrelevant in my view relative to the need for these parties to be coming to the to be driving the demand for the metal a lot higher.
Uh, Ta- Tavi, you're originally from Venezuela, right?
Brazil.
Oh, Brazil. Okay. Um, well, I'm paying attention here to sort of what's happened with Elon and this idea that they were going to cut a whole bunch of government spending, right? And this idea that it would work and they'd be able to come up with some sort of cuts to the deficit and ultimately rein in some of that spending. In the end, it sounds like they're going to end up with higher deficits than when Trump started. And then I look at what's happening here in Canada, where we're coming off a pretty large deficit, and the party, at least in the polls right now, that's projected to win, is the one that is going to blow those deficits out of the water. And it just sort of seems like we all kind of had this idea when we first heard Ben Bernanke say the words quantitative easing. But now seems like that final point where everyone's just kind of realized, or at least they've come to this idea that deficits just don't matter, budgets don't matter, just do whatever you want. And I feel like the reason that I brought up the Venezuela thing, which apologies for getting that wrong, uh, is because you've seen this play out, at least if you were paying attention to uh, the economics and politics in South America, which I'm certain that you were. Do you think that we're kind of at that inflection point right now in terms of where deficits just spiral out of control and Americans are about to find out what inflation really is?
Yes, I think there has been a lot of focus on government cuts in terms of spending, and um, the reality is that in order to accomplish that, you have to lower rates more than cutting wasteful spending. Wasteful spending is great to be aware of and be able to readjust those expenditures. But at the end of the day, what's really going to move the needle when it comes to the exponential growth we're seeing on the debt, it will come mostly from the cut of interest rates, particularly from 5 to 7 year yields lower, because that's most of the duration of the debt right now. Is not on the long end; it's on the short end. And so I think the relationship with Brazil specifically, or South America, is the relationship as well we're seeing with some assets like the dollar sell off, and the treasury market on the long end has been selling off. And there has been some questioning about the lack of discipline in the U.S. And so I think that you're right. We're probably going to see deficits increasing for many reasons, maybe even because of a recession alone. That is usually where you tend to see about even 6 percentage points of increase on deficits to GDP. And so this could be very meaningful. But at the same time, once things just start getting, I think, quite worried from a contraction of the economy, I would suspect that interest rates, especially on the short end, are going to fall apart. We're going to see much lower. It amazes me. I've said this a few times, but it amazes me that the 2 year yield is still hovering around 4%. I mean, it wouldn't surprise me at all if we see a one handle in the 2 year yield, a year or 2 years from now. And I don't think we're going to go higher again to the degree that we saw recently. I think that's going to stay there for a long time, just because of the situation. And once we are able to see the improvement on the deficit by cutting rates, I think there's almost zero chance that we're going to be able to increase rates again. And that comes back to my firm belief of allowing inflation to run hotter than historical standards, because you have no control over inflation. You have no control over where interest rates could be. And additionally, I would say pay attention as well, potentially, to what's happening with Scott Basson again and the Treasury Department when it comes to looking for almost like pillars of demand for the treasury market. It's changing regulations for the banks, allowing the banks to buy treasuries. It's the Mar-a-Lago Accord, and or even firing Jay Powell and lowering rates themselves. I mean, all these things are ways to sort of, or even gold revaluation on the balance sheet to increase your TGA account to then buy back treasuries, which is what Scott Basson has said. It's their toolkit that is bigger than the Fed's toolkit, and he's not wrong. So, yeah, those are the things that the Treasury, not the Fed, can do to substantially lower interest rates in this environment.
So I want to understand that a little bit better, what you just said. So you're suggesting that the Treasury could go and effectively buy and cancel debt via gold revaluation? Is that what I'm understanding?
Well, it would be perceived as that. It's basically QE, right? I mean, it's QE,
Okay.
but really conducted by the federal by the Treasury. It's actually conducted technically by the Fed, but
Okay.
it's directed by the Treasury,
Okay. Got it.
where QE would be done by the Fed. And why does the revaluation of gold matter? Because you need to increase the TGA account to use that cash balance to then buy back those treasuries. And that's the critical aspect. A lot of people see, well, you're going to have to revalue gold, then you're able to build a strategic reserve on crypto and all that. That's just noise. The big thing is now the treasury is in a way is benefiting, is incentivized to allow gold prices to rise, to then be able to revalue at a much higher price and allow the TGA account to have more cash, because it's the increase of the collateral value, i.e., the reserves of gold in their balance sheet, that will increase the amount of spending they can have on the TGA account, or the treasury cash balance. So, So the government is incentivized to allow gold to rise significantly from here. This is why I don't rule out the potential that maybe we might be the ones buying and pushing gold prices higher. Who knows? Nobody knows that answer for that. So it would be plausible if that's the case. I mean, I would make a lot of sense. I mean, just listening from Trump and his team, I think a lot of people understand the value of gold and the importance of gold. So,
I'm curious, how much time have you spent on looking into China's gold holdings? We always hear these sort of conspiracy theories in the background that China has a lot more gold than they have officially stated. Have you spent any time on that, or do you give that any consideration?
yes, I spent a lot of time, especially so back in 2014, 2015, we had a big theme about China, wrote about the Lehman Brothers moment was going to happen with China. We had a huge short position. We were on Bloomberg talking about it and all sorts of things. And, um, and we had to do a whole research on their international reserves. My view is a bit different than majority of people on this. I don't think China is you know as freely on a buying spree of gold as other people think. I do think they're buying gold, and I do think they're in the process of basically um, trying to own, or I should say, enhance the quality uh, of their international reserves by just switching from treasuries to gold. Now, their capability of doing that for too long is not great, and that usually impacts their currency. So the more they do that, they have to sell local currency in order to do that, and there's a lot of pressure on their local currency right now because it's a closed current account with a lot of pressure from investors, from domestic investors, to take money out of China, which is being blocked by the fact that it's a closed financial account and current account. Um, it's that becomes very challenging. So it's been always my view that it's not as simple as a lot of people have said, and therefore why we're probably not going to see China becoming it's this big potential, number one economy that will take over and become the reserve currency. The yuan will become the reserve currency, so forth. I've always been skeptical of that view. I think now it's been played out a lot, right? I mean, we've seen most of the companies we used to talk about, Sunac, Evergrande, have all basically went bankrupt. And so it's difficult to have a bearish view of the whole thing, but at the same time, I think it helps to understand that despite the fact there's some real structural problems in China, they have been enhancing their foreign reserves and favoring gold over treasuries. But I don't think they're doing anything that is massively, that would be to the degree that would challenge the ownership of other places like the US. But that's my read of the situation. I understand that's a contrarian view, and most people listening to this will disagree with me.
So, do you think that there's any kind of off ramp here for Trump when it comes to his negotiations with China? We're just watching the media every day. It almost kind of seems like the China's not really communicating with the White House right now, and we're hearing that if there's not some sort of deal done in the next 2 weeks, Americans are suddenly going to find empty shelves at Target and Walmart and their dollar stores, and it's going to get quite messy. Do you think that there's an off ramp here, or do you think that Trump's just going to have to just ultimately back down?
I think near term is impossible to know that. Clearly, the media has been painting the picture you said. Um, I think that recently we saw some optimism in that front that caused markets to go up in terms of the easing the tensions and Trump stepping back. Wall Street Journal has been all over that. They basically wrote like 20 articles in one paper about how Trump is in all different angles of why Trump is basically doesn't have the upper hand. Um, so clearly the media is, and it doesn't mean that they're right. It just means that the media is painting that picture to households and folks that read those things, which I do. Um, and so now, do I agree with that? I don't. I think Trump does have a master plan of restructuring the debt and having some sort of military support through Europeans and other economies, especially Europeans and Japanese institutions to potentially, agree to something that they would be buying treasuries or at least restructuring their current holdings in exchange for military support, of which would probably come in odds with being friendly with China and so forth. So I think that's real. I don't think that's going to go away. So I don't think there are going to be major agreements anytime soon with China. I think Basson was said yesterday that this may take 2 years. Maybe this was, maybe people didn't really hear this yesterday at his speech, and which was fascinating, by the way, where he talked about rebalancing and fair trade and so forth. But I don't think it's going to be as the media is painting, where Trump is gonna step back and say we can't really do much here, and let's just agree on lower tariffs and so forth. And I also don't think it's going to be the tariffs that we're seeing here. I mean, it's going to be in between. Yeah, I mean that's just my 2 cents on this whole position. Yeah.
Yeah, I certainly agree. The media is making it seem like it's impossible for Trump to not back down, and that it's basically going to be an absolute disaster if there isn't some sort of an agreement reached in the 2 weeks. That's just me throwing on CNBC and Bloomberg and CNN every day. So we'll see. Now, I got to ask you a question about silver. I got to sneak one in because I know our audience love the. We got a lot of silver bugs in our audience. What's your read right now on the silver market? Why hasn't it been quite as we haven't seen quite as momentum in silver as we have with gold? Why is that?
I think it's just the nature of the cycle, in terms of there's a lot of assets that have been lagging their main um, underlying assets, and silver is not the only one. You got junior miners doing the same, right? You have emerging markets also not doing very well yet. Um, and I think this is all, in the pipeline. I think it's all coming. It's fascinating to see silver approaching $35 an ounce, and trading between 30 and 35 here recently. And the gold to silver ratio is still near 100. Yesterday we saw the gold to silver ratio to fall. I think they have the largest daily change since October of 2008. At that time, it was a peak for the gold to silver ratio at around 85. And to remind everybody, we're at 100 now. So we're starting from a higher level. At that time, we saw this sort of initiating downward trend of that we got close to 30 on the gold to silver ratio, of which in today's levels, you would imply $110 an ounce in gold to silver. I'm sorry, a gold price, silver prices, of which would be well above that cup and handle, formation that we see all the way back to the 70s. It would be a major breakout. And I do think it makes sense. I think that's still coming. We're still likely to see all-time highs for silver. And yeah, it's not the time to be bearish. We've been extremely constructive on silver. I think the metal has performed incredibly well, especially despite the weakness in, the economy, given the little bit more of a cyclicality nature of silver. You would expect to be a lot weaker than what it has been. And I think it's been performing quite well and behaving quite well. And copper too, by the way. Copper has done very well despite this sell-off that we've seen recently. I mean, some of these days, copper has done, very well relative to Nasdaq and S&P 500 on a weekly basis, on a daily basis. It's been very impressive to see how metals are going from being cyclical commodities to geopolitical assets that are required to be owned almost at any price. And that's what happened with gold, and I think that's what's going to happen with these other metals as well.
So I got to ask you, if you're thinking about investing in the equities side of the gold companies or the silver companies, we'll just say the mining space in general, at this stage, where's the sweet spot? Do you think it's those second tier companies that are uh, attractive for acquisitions from the majors? Is it the majors as they're printing cash? We saw Newmont put out earnings this week, and they were quite strong, obviously, with the price of gold increasing. Or do you think that you're better off going down the risk curve a bit and waiting for some of these acquisitions to happen, and we start to see the shareholders with cash, and then they tend to want to migrate down the risk curve? Where's that sweet spot right now if you're looking at the risk reward that you think is the right place to be kind of playing?
I think you have a situation where the major companies have been responding somewhat well to metal prices. You've had GDX reaching decade highs and so forth. You can't say the same about exploration and the juniors. Um, and so the opportunity is clearly on the latter, the juniors. They have not moved yet. I would point out to one stat that I think is helpful, at least for me, in terms of the moment. Um, if you look at the cash flow or the free cash flow that of mining companies, which comes almost entirely from seniors, because those are the ones that actually have producing assets that generate cash. Um, Usually their free cash flow position is strongly linked to the performance of the juniors. I suspect that the margins that we're seeing for most of these producers will continue to stay high. Even if gold prices in a crazy market falls to 2,500, you still have an environment where these companies are probably producing at least $1,000 an ounce margins, because from my understanding, all sustaining costs have not risen as much, are probably around 1,500 still for most gold miners. And so they're producing at insane margins right now. And, almost every project works in terms of economic viability. That money is going to have to chase other things as people start seeing the opportunity. They want to produce more. In order to produce more, you have to go down the lower list of cheaper names. And so ultimately the money flows back into the smaller names. And to answer your question, I think that's where the opportunity is. I think that's what's coming. So it's fascinating. But developers and exploration are probably the next leg to benefit from this bull market.
So, have you come out and put your neck on the line at all with any sort of targets for, say, gold or silver this year, or is that something that you kind of don't do?
I'm not allowed to. It's not that I don't want to. I'm not allowed to. I can't do it. SEC does not allow you to do a hypothetical price target. So the best I can tell you is about history, and the best I can do is share prices we've seen in the past during similar historical contexts. Um, it would be normal to see you're just looking at gold relative to, for instance, yeah, gold had a big move here. It's covering around as well, 3,300. Um, it would be normal to see if you look at gold relative to reserves, relative to treasuries outstanding, going back to that whole point about revaluing gold, but also going back to the whole point about how much should the government own of gold reserves relative to where total amount of debt is. We've got about $36 trillion of debt and less than $1 trillion of gold. So we're talking 2% or so of gold relative to treasuries outstanding. Back in the 1940, that's at gold prices. That's not using $40 an ounce, ridiculous, price, price throughout history. But if you go back and look in the 40s, you know, we used to own close to 40% of the treasuries outstanding. And go back to the 70s, used to be like 17% of the treasuries outstanding. Now that would imply a gold price of about 20 plus, $1,000 an ounce, which I know it sounds crazy, but yeah, and that's just historical context for you of where things could be if we're in a pickle or a dilemma macro wise because of the imbalances we have. Um, would I rule it out? No, I don't. And then you can go from there and just think about, okay, where would be silver trading if you have a situation like that, particularly if we go back to call it a 60-70 gold to silver ratio, which would be more appropriate. And you do the math on that, and you can see your asymmetry. To me, it's similar. I would maybe say that the best analogy, if you look at something that is interesting, the cyclically adjusted PE ratio of the stock market historically, you want to be buying both hands, right? When that is at around, call it, single digits CAPE ratio. I would say that the silver market is like the equivalent of the stock market being trading at, a 5 multiple on the CAPE ratio. Today, the equity market is at a 35 or so, between 35 and 30. And so that's the opportunity you have, right? I mean, is historically that's how cheap it is. Gold is probably between 5 and 10. So despite the move we saw, we're so far away from where it could be in regards to being overvalued. So yeah, this is why I've been very cautious about using technical analysis on these things, because I think that's might not be as constructive way of building wealth in this environment. I actually think that might scare you away from the accumulation of the metal.
All right. Well, Tavi, thanks very much for hopping on here today. If our audience wanted more of your commentary, where can they go to?
They can go to my Twitter account or X account at Tavi Costa, or LinkedIn. You can type my name in. You'll find some of my work there, or at Crescat.net. There's also the website and where you can see some of our research there as well.
All right. Well, Tavi, thanks very much for hopping on here. And hopefully we can do this again soon when gold continues to show some major gains.
Sounds great. Thanks for having me.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.